Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Crypto markets are witnessing a dangerous paradox of innovation and devastation. Cboe BZX has filed for 3x leveraged Bitcoin and Ethereum ETFs. This aggressive move requires a critical SEC exemption. The regulatory hurdle is immense. Prior 2x funds suffered catastrophic 96% losses during volatility spikes. These new products amplify that risk exponentially. Regulators are watching closely. The SEC must decide if this speculation serves investors or merely accelerates their ruin. The filing signals a bold, high-stakes gamble by Cboe. It tests the limits of regulatory tolerance for leveraged digital assets. On the macro front, U.S. consumer confidence is fracturing. The University of Michigan reported consumer sentiment plummeted to 51 in August. This figure missed the 54.5 forecast significantly. The drop reflects deepening anxiety over inflation pressures. Households are feeling the pinch. This data complicates the Federal Reserve's path. Weak sentiment often precedes reduced spending. It adds deflationary pressure to an economy already grappling with sticky prices. The Fed must weigh this softening demand against persistent core inflation. The margin for error is shrinking. In the energy sector, a stark divergence is emerging between analyst forecasts and market reality. Goldman Sachs slashed its 2025 Brent crude forecast by $6 per barrel. This cut contradicts current market dynamics. Brent prices have surged 6% recently. The rally is driven by supply shocks from disruptions in the Strait of Hormuz. Goldman's bearish view ignores immediate geopolitical risks. It assumes demand destruction will eventually outweigh supply constraints. Traders are betting on the opposite. They are pricing in continued scarcity. This disconnect highlights the tension between long-term economic models and short-term geopolitical volatility. Meanwhile, in Libya, political instability is threatening economic stability. Central Bank Governor Naji Issa has set 3 conditions to stay in office. He demands unified government spending. He requires halted salary hikes. He insists on strict trade controls. These demands come amid severe dinar depreciation and cash shortages. Issa's potential resignation would remove a key stabilizer. It could trigger further currency collapse. The central bank's credibility hangs in the balance. In related news, CPC Corporation is maintaining stable pump prices this week. This decision provides cost certainty for industrial clients. It stands in contrast to broader market indices, which show slight declines. CPC's strategy suggests a focus on volume over margin expansion. It offers a brief respite for consumers facing volatile fuel costs. Looking ahead, the economic calendar is quiet. There are no major high-impact releases in the next 36 hours. Markets will likely digest today's sentiment data and crypto developments. The lack of fresh macro data allows existing trends to dominate. Investors are waiting for the next catalyst. Whether it is a Fed comment or a geopolitical escalation, the stage is set for volatility. That's your market briefing. Follow Rumour with AI for daily market intelligence.